Well, good morning and happy Monday to you. This is James Hecker bringing you the mortgage rate recap and forecast. So today is October 31st. Well, it's Halloween, and well, Halloween, where did that start? Well, it is thought to have started in a Celtic, Gaelic celebration of a harvest, and now that it was Christianized into All Hallows Eve, which is the eve before All Saints Day. On November 1st is All Saints Day, and then on November 2nd is All Souls Day, where we commemorate the souls of all of the departed, those who have preceded us. But getting into the recap and the forecast. So this past week was the first week in several that mortgage interest rates ended up lower than they were at the beginning of the week. And well, why is that? Well, the Feds have got a meeting this week to discuss the discount rate. They've been raising that 0.75% every time they've met for the past 3 times. And the market is assuming that they may, what they call, pivot. It's fully expected that they will raise the interest rate full 0.75% as they have the last 3 times. But there's language that's expected out of the meeting minutes this Wednesday, not the minutes, but the meeting announcement this Wednesday, that may be softening towards maybe the December and the February meetings, a little bit slower rate of raising interest rates. So that had a positive impact on mortgage interest rates. And so here I am on Halloween out here at Lombardi Ranch, which is just an absolute icon for our community here in Santa Clarita. Brought my kids out here every year. We pick a pumpkin and they have little rides and corn mazes and all kinds of things. So out here today, just to share this with you. So that was the recap. What about the forecast? What can we expect this week? Well, we've got a couple things going on this week. As I said, the Federal Reserve Board is scheduled to meet, and they'll release their findings of their meeting on Wednesday afternoon, where again we expect them to raise the discount rate, which directly affects the prime rate, as well as that affects credit cards and car loans and home equity lines of credit. So we expect to see that full 0.75% increase this week. And then there's also the Bank of England. I talked a couple of weeks ago about how their inflation fighting moves were affecting our bond market as well, and thought that was kind of over, but it's not. It's still anticipated to possibly create some volatility in our bond market here in the States, and that's on Thursday. We'll see what they come up with. And then on Friday, we've got unemployment numbers. So as the unemployment numbers grow, if there is more claims for unemployment, that's a negative impact on interest rates. So I'm sorry, the exact opposite. That's a positive impact on mortgage rates. As the job market grows, as there's less claims for unemployment, that's somewhat inflationary and will tend to cause the Feds not to slow their mortgage, their discount rate raises or rising as much. So that's the volatility that we expect this week. And of course, if you have any questions whatsoever, give me a call at 661-714-2145. I'm always happy to discuss your situation, whether it comes to purchasing a home, refinancing, anything else, financial and real estate related. And, there is a little bit more opportunity in the marketplace right now, as everybody knows that sales have slowed down somewhat, and there's not as many buyers for homes as there once was because of the higher interest rates. And so, if you are interested in buying a home, you have a little less competition right now. Give me a holler to discuss that. It's always great to check in with you guys, and I look forward to speaking with you. Thank you so much. Have a safe Halloween, a great week, and if you get a chance today to come out to Lombardi's Ranch, I recommend it, especially bring the kids, get some pumpkins, some gourds, whatever, and last minute decorations for the house. Take care. Have a great week.